Hello, and thank you for viewing into this tax tips for college students, a an event proudly supported by Tiffin University, specifically our Accounting and Finance Club, as well as Lisa Young, CPA, a certified public accounting tax professional located in Tiffin, Ohio, a proud supporter of Dragon events, not only Tiffin University, but specifically the Accounting and Finance Club and this event. My name is Professor Marvin. I am an instructor of accounting here at Tiffin University. I also happen to be a certified public accountant in the state of Ohio, and am excited to share this this tax seminar with you today. This event was scheduled to be hosted by the Accounting and Finance Club on campus earlier this semester, but as all of us are all too familiar with, the pandemic has limited our campus activities, and in that event, the Accounting and Finance Club has decided to provide you with this essential and very beneficial information virtually here through this online virtual presentation. So to begin, just some general filing status information, just some background, some general tax advice to get us started with. There's basically 5 different filing statuses that the IRS as well as states recognize. For you, generally, as a college student, you're most likely going to be considered a single taxpayer. And as we go through the other qualified filing statuses, you'll understand why single is probably the most accurate and the most applicable to college students. Our second filing status, married filing a joint return. Obviously, that's for a married couple. The third status is a married couple filing separately. The fourth status is a head of household. That's a single person with dependents. And the fifth and final filing status is a qualified widow or a widower, a formerly married individual in the year in which their spouse has deceased. So again, for you as a college student, in the event that you're filing your own tax return, most likely going to be a single taxpayer. The IRS does have a fantastic resource area. One of those tools that is available is a little app in order to determine your filing status. So if you just search out on the IRS website, what is my filing status, you'll be directed towards this little brief filing status tool on their website. Again, focused on your tax return as a college student, you're most likely going to be filing a 1040EZ. This is just kind of a boiled down tax form created for taxpayers that have very little information, very little income as far as sources of income, and makes it kind of streamlined and easy to fill out the form. No pun intended there. It's a basic form and does not require much preparation. Sources of income would include things like wages from a job, but does not include more extravagant sources of income, capital gains and farms and businesses and those sorts of things. All right. Filing requirements, who really has to file? Well, the basic advice from most tax professionals is that everyone should file a tax return. even though your income may be under the 12,200 single standard deduction amount for 2019. If you worked any job whatsoever during 2019, most likely there was federal withholding or state withholding taken out of your paycheck by your employer. And the only way to get the money back, if you've overpaid, is to file that tax return to kind of flush out any overpayment that you might be due as a refund for 2019. So generally, the idea here is that if you had a job, if you had a W-2 from an employer or a 1099 from a subcontract arrangement, you probably should be filing that tax return. The lion's share of the benefits to you as a college student lie in our education credits that are available from the Internal Revenue Service on a federal tax return. The two key credits that are available is the American Opportunity Tax Credit, as well as the Lifetime Learning Credit. And these two credits we'll dive into here in just a second. But before we get to the finer details of both of these, just a little bit of information about a tax form that you received most likely from Tiffin University earlier this semester, probably back in January. This is what's called a Form 1098-T. This is a tuition statement that the university is providing to you. Box 1, very important, the payments received for qualified tuition and related expenses. This is what's going to drive the calculations for your education credits. The filer's name, this is where Tiffin University would be listed as the higher ed institution. Your name and tax ID would be listed here. And all of this information is very important. You'll see here, check if at least a half-time student, and we'll explore what that means and why that's important here in just a second as we start to look at the two education credits. So the two education credits are claimed on the federal tax form 8863, and this form goes through the calculations and determines the amount of each of those credits. So let's take a look at how we do kind of some of the highlights of each of these credits that we're talking about. So the American Opportunity Tax Credit, this is a credit of $2,500. What that means is that this credit has the potential to put $2,500 in somebody's pocket. And so we'll talk about how that's calculated here. So the requirements to gain this credit is that you must be pursuing a degree. So if you're enrolled at Tiffin University and at least a part-time student, right? So back to this form here, at least a half-time student, you are eligible for this credit. This credit is available for your first 4 years of higher education, and that's determined on a tax year basis. So again, January is the tax year, and so January through December, so not an academic year. And so there's a few hoops, a few considerations to look at there, and some triggering events related to which academic year you're in. For sophomores, juniors, pretty much a no-brainer. But when we get into the seniors, depending on when you started and where you're at, if you're a traditional, just fourth-year senior versus other items there. So again, if you're running into any complicated areas, you may want to seek some professional tax advice to ensure that you're on the right board there. The credit is actually calculated as 100% of the first $2,000 in tuition and fees. So if you've only paid $2,000 in tuition and fees, then this credit would be maxed out at $2,000. If you've paid an additional $2,000, that's where the rest of the $500 in credit would be calculated. So basically, if you're a freshman, if you completed your freshman fall semester 2019, that was your first year of higher education, and you paid $4,000 of tuition and fees, you most likely are eligible for a $2,500 credit. Okay. Now, the other important element is that these credits go along with the tax return in which you are claimed as a dependent. So if you are still claimed as a dependent by a parent, then this credit is still available, but it would be claimed on the parent's tax return. So again, the claiming of the dependent is where these credits go as far as which tax returns they're claimed on. Okay. If you're a graduate student, or if you're a student where maybe you changed your major and you've gone beyond the traditional 4-year academic plan here, but you're still attending school, or if you're an MBA student or a postgraduate student, you are still eligible for what's called the lifetime learning credit. And this credit is very similar to the American Opportunity Credit, except for that it goes beyond that 4-year period, and then the amount of the credit is actually calculated as 20% of the first $10,000. So in order to maximize this credit, you would have had to incur $10,000 in tuition and fees during 2019. And again, this credit is going to be claimed on the tax return in which the student is claimed as a dependent. So the credit goes along with that dependent status there on those tax returns. Next up is more of a postgraduate item, a tax benefit that you have in the event that you borrowed money and have a student loan after you graduate. When that student loan comes out of deferment after you graduate and you start to make your payments on that student loan, you are also eligible for what's called the student loan interest deduction. Now, the benefit of this is and I don't want to get too far into the weeds here, but basically that you are eligible to deduct up to $2,500 in student loan interest as those payments start to occur after you graduate. There are some requirements of the eligibility of that student loan that you acquired during your time in earning your degree. But again, the benefit here is a deduction, which is not nearly as beneficial as the tax credits that we just went through. But a tax benefit is a tax benefit. So the idea here that there is still a deduction available, still want to maximize any benefits that we might receive from Uncle Sam and lower your taxes as we can. A few state considerations that are really specific and kind of pointed to college students again is, if you're an out-of-state student, if you happen to be from the fine state of Michigan, Indiana, Pennsylvania, or anywhere besides Ohio, and happen to be attending Tiffin University, then this can be a little bit of a question or a hang up as to, well, what state do I have to file tax returns in? How do I determine what I need to do? And so what the states generally are looking at is whether or not you had a permanent move, or if your attending college is just a temporary relocation in order to attend college. And so some things that the states are looking at is, what are your plans for after you graduate? Are you planning to relocate again? Kind of further supporting the idea that that your attendance at Tiffin University might just be a temporary move in order to pursue your higher education. Another kind of benchmark test, if you will, in determining what state you're considered a resident of is back to driver's licenses and what state you're registered to vote in. And so those types of things are helpful in determining your actual state of residence. And so, again, kind of back to the idea of filing requirements, even if you're claimed as a dependent by your parents, the state returns are still a good idea to not only file, but also you may be due a refund, and the only way to get that back is to file those state tax returns. Not necessarily specific to state tax returns, but just some documents, some forms that are kind of required for filing tax returns. W-2s. So if you had a part-time job or a full-time job, as a maybe as a wait staff at a restaurant, or whatever the case might be. Those W-2s are your wage statements from those employers, from the company that you worked at. If you happen to be a subcontractor instead of a traditional employee, you may have also received a 1099. The big forms, the key other documents that you would have as a student, that 1098-T that we went through earlier, that shows your tuition and fees that were paid during the year. Also, the Form 8863 that we kind of introduced very briefly, but that's the form in which the higher education credits are calculated. In the event that you're already starting to pay back student loan interest, that's where we would have that 1098-E for the interest paid. But again, that's only if you're starting to begin repayments on any student loans that you may have. Just a little brief introduction into the international tax situations. If you happen to be an international student and attending college here in the U.S. And need to file a tax return, and you received a W-2, the tax form here is a Form 8843. And this information, just a little snapshot of the introduction of this tax form. You can see that your address from your home country, your domestic country, is required, as well as your address in the United States. Some information regarding your visa is also required. And again, this form is required to kind of help build the bridge for non-residents or international students, specifically as it might relate to college students. So a little bit about some other elements that relate to the tax credits. The American Opportunity Tax Credit, as well as the Lifetime Learning Credit, are only available for U.S. domestic students. So if you happen to be an international student, you are not eligible for those tax credits, even if you worked at a job in the U.S., even if you are maybe claiming yourself as a dependent and so on from there. those credits are not available to you as a non-resident taxpayer. However, there may be domestic tax benefits to you as a student back in your domestic home country. So I would encourage you to reach out to those tax agencies and garner some information from them as far as any tax benefits that your country may allow or provide. And then there may be some additional documentation that you may need to reach back out to Tiffin University in order to get that documentation to gain access to those tax benefits. So again, I'd like to thank Lisa Young, CPA, a proud supporter of all things Tiffin University, including this tax seminar. I provided here is her phone number in the event that you'd like to seek some additional tax guidance or a very reputable tax professional here in Tiffin. And many thanks to her for her support of not only Tiffin University, but specifically this tax tips for college students. Again, my contact information here in the event that you have any follow-up questions, my email address here listed. But again, many thanks to you for viewing into this tax seminar for the spring 2020, and look forward to seeing you back on campus real soon. And save those bucks and make sure Uncle Sam isn't keeping any of that money that might be due to you or your parents. And have a great day, Dragon Nation, and take care. Be well, stay safe, and stay healthy.